Okay, good afternoon, folks. If we can just do a quick sound check, make sure I'm coming through okay. Okay, there's a bit of a delay, of course, so make sure that's all happening. I will get the hang of this streaming setup at some point. Just bought myself a new tool as well, which is going to allow me to start drawing on the screens at some point, so I'm getting used to that at the moment. Normally I have my own lines on there, but now I've got this new neat little tool that's going to allow me to put on some comments and so forth. Okay, well, I hope you've had a good morning so far on the market. It's been a bit of a dull day by looking at things. I took a few pips out of the yen on the way up, or on the way down, but the dollar on the way up. But it's been very quiet today, really. Certainly, if anything, you've been playing it from a trend trader, as I am. I've been trading, the last couple of days following the dollar's strength, and that's really the way I think it's been. It's been great for people that have been doing that. Looks as though it's coming off its highs now. Of course, we had the yen break through up to 109.50, which was always going to be a good level, and it tested up to 160, 170 or so, and now it's trading back down again. A bit of consolidation, a bit of profit taking, no doubt. And of course, all the eyes were on the euro at the 107 level. Dipped down below a couple of times, and now we're seeing some recovery on that. If anything, I mean, I said to you before in the past, this is not going to be a signal service, but I did mention on a little stream I put out about 3 hours ago that if anything happens, if anything doesn't have anything significant, then I'd look to get myself a bit long again on the dollar against the yen, actually around these levels, just looking at it about now. But I'm not going to get involved in that while I'm on the stream. But this was basically the level I'd be looking to get long myself, with a stop always in place, but I'm going to come to that later. Okay, today's chat now. Last couple of days we've been talking about my life, the good old days on the life market. We're just going to wrap that chat up now because it's as much of interest it is to a lot of people. I don't want to spend 2 weeks talking about my previous life, so we're just going to talk a bit about it today. What makes the markets different in those days to today, and why we've and how basically I've migrated from the pit to the floor. And after that, as of tomorrow and Friday and then next week, we're going to get into something that's slightly more relevant to today's market. Okay, so one of the questions I do get asked pretty much all the time by people that don't know much about trading, and they know that I've come from that background, is was it easier in those days? And quite honestly, I always think that is a very the answer to that is very subjective. For some, making money on the floor certainly was much easier, but I also think that making money on the screens for others has been equally easy. But I think the truth of the matter, I don't want to say easier, that's wrong. The truth of the matter is that none of it is easy, but the big relevance here is that it was just very, very different. The pit to the screen is just a very different environment. And I think one of the challenges that I found, coming from the pit to the floor was the solitary nature of the screens. You're sitting in front of, I think most of you are on single laptops or whatever, but I sit in front of all these screens. I'm pretty much on my own in front of the screens now. When I first started on the screens, you didn't really have the chat forums available for to bounce your ideas and feel part of a community. That is great now, and Forex Signals has got a wonderful, well participated stream room there with lots of great comments coming in, lots of really good people. I've been following it over the last few days and actually been interacting as well, which is again a new experience for me, but I'm really enjoying the feedback, and there's a lot of intelligent traders out there, so that's good. And obviously the premium room that's going to be coming up is even going to be better, because we've got people that are taking it, that are serious traders, people that want to take it to that next level. So we didn't have that when I started trading, but now I think it is great that if you're sitting in front of your screens, you have this ability to do that. But I'd say the styles are very different from the floor to the from the floor to the screens. And most of the traders down there on the floor, although they were wealthy, these were not college graduates. These weren't university degree holders. I mean, these were pretty, just bog standard people. I mean, what they had, they were quick thinking. They were sharp. They could smell, fear in other people. But most importantly is they knew when they could take the markets on, but they knew when they could, or should be sitting out of the market. And I think that is key, and it's also key in today's environment when we're on the screens. You should be knowing when to get involved and when not to get involved. And I'm sure that most of you that trade throughout the day, the temptation to trade when there isn't a trade going on there is really quite a challenge. And I think that's something that you really must come to to throw that away. You've got to just trade when the trade is right. I mean, when you get into the chat rooms, I know that sometimes there's a temptation because people are always throwing out ideas. But at the end of the day, you should be trading your plan and only trading when it's right for you to trade. Even for myself, the new room's not going to be a signal service. I'm going to be showing trades, but my trades are my trades. Doesn't mean you should be doing your trades. But a lot of the traders on the floor, they used a different. They knew when to get into a trade. They knew when to get out of a trade. But the style that they used was also sometimes very, very different. I mean, one of the classic ways that they would make money down there, a lot of the locals, and that's if you remember the independent people, they would jump in front of orders. They would be able to see a hand signal coming in from one of the phone clerks around the exchange. They would see a hand signal coming in, and they would jump in front. And now, I suppose in a way in this day and age, it would be considered illegal front-running orders, but it wasn't in those days, and it certainly could never be proved. I saw your hand signal, you didn't see my hand signal. It was just that was just impossible to prove. But I'm sure it happened where people would be able to jump in front of an order. If you suddenly hear the yellow jacket on the phone shouting from Goldman Sachs, sell 500 at market, you're standing in there as a local, and you know that a big order's coming in. You know that the market's going to go down, and what are you going to do? You're going to sell it, or you're going to buy it? Well, you're going to sell it. So, so that definitely went on at the time. But us as brokers, remember, I spent most of my time as a broker. I was a local for a period of time, but as I mentioned on Monday, I think I found the corporate life better for me. But as a broker, we were able to, in a way, deal with those front running of hand signals. If a local was continuously annoying you and getting in front of your orders, you would miss him out on the next trade that was coming in. If you're a seller and all the buyers are out there and you've got to sell your contracts, you sell 5, 5, 5, 5, and if he's been messing you about, you'd miss him out of that trade and he wouldn't get an execution. So there's a bit of two-way toing and throwing on that. It wasn't just one-sided. They had to have respect for you as much as you had respect for them. Another thing that we did was, if someone was really messing us about, we'd go to the phone book guy and say, look, in a minute's time, send me an order into the market, 1,000 at market, but it's a made-up order. It's not going to go in. I'll just look at you. The locals will see that. They'll start selling it, but of course my 1,000 at market was a made-up order, and I wasn't going to start selling anything. But obviously they've thought they've front-run your order. So if someone was doing it for the same periods of time, we'd do something to make sure that he wasn't too sure whether it was going to be a real order or not. But that, quite honestly, was quite a dangerous ploy to take, and I've certainly seen some money lost on the back of that in the past. But equally, if you were a broker like myself, or an inexperienced broker or a nervous broker, you'd come into the pit and you've got, say, 20 or 30 contracts to sell, and you were nervous and you were panicking, you were doing 2, 3, and you were slow getting your order done. Well, it's right for the locals and the market to jump in front of you and leave you behind, and the market moves off without you. And you've got to go back to your customer, your client, and say, I'm sorry, I didn't get the trade off. Locals jumped in front of me. Well, they say, well, that's the local's fault. Well, no, it could honestly be the broker's fault. He wasn't good enough. He didn't get the trade done. And that's why in those days, a good broker, fast, sharp, they were earning the money, and they were sought after on the exchange floor. So another thing that would happen, on the floor is that you could discuss, because it's all open outcry, but you're obviously talking to people all the time. You've got an order card with all your client orders on there, and I'm buying here, so you can, as much as you have now, you have the depth of the market. Well, we had the depth of the market on our cards. So you're talking to one of your mates. Again, I'm not saying this happened all the time, but you're talking to one of your mates and he knows what your card is. I mean, you'd have to keep your card to yourself normally so people didn't see your orders. But, you might say to your mate, I'm bid here, I'm bid here, I'm bid here. That was a way that you got to know the depth of the market. This was, a common way. Again, it was just all word mouth to mouth. It wasn't something that you could see on a screen. Stop orders was another thing. Now, we all use stops. Well, if you don't use stops, maybe you should come and join the premium room and talk to me for a while. I'll talk about that later, actually, stops. But, stop orders was another way that used to be used very differently than what we do today. We would, you'd get to know where people's stops were. Someone might tell you, I've got a stop at, and you knew if the market traded at a certain level, that stop was going to be activated. Again, it wasn't on a screen. You actually knew where the stops are. People always talk about now on the screens, the big institutions know where your stops are, and they go stop hunting. Well, at the end of the day, on the floor, you knew where the stops were because you chatted to the bloke beside you. So it was, a different way. And another thing people used in those days was, they would stop you out. If if you had a position as a local, you could give an order to the guy, to another broker and say, sell me 10 at stop, and he would then execute your order. So you'd be able to get out of a position, with a broker. Locals would talk to their mates and say, can you stop me out? So if the market does go down, again, it wasn't illegal. If it was done the right way, using stop orders was totally legal. It's just the way we did things. Looking at people's eyes. When standing in a pit, you can tell when someone is about to buy it or when he's about to sell it. It really was, quite amazing, the fear in people you can read people by looking at their eyes if they're about to move the market higher. If they're going to buy the market, you can tell they're not looking at the people that are buying. They're looking at all the people that have got their hands like this. They're looking at the people that are on offer. And if you're looking at some guy and he's looking at all the offers, he's about to buy something. You get in there before him, you can make a ton of money. The other advantage I think we had on the floor, got to check the time today because Jason's coming on not soon after me and I tend to waffle, but another one of the advantages we had on the floor basically was the fact that we had a split-second advantage of the numbers that were coming out. Now, non-farm payroll, for example, we all know it's a big market mover. It still is a big market mover, and it still was then. We're standing in the trading pits. We see the same screen that the guys in the office see, the fund managers, the investment bankers, the traders in the office with the big money behind them. We're on the screen. We can see the same number come out. We can sell it immediately or buy it immediately. They've got to shout the order to their guy on the phone. The guy on the phone's got to hand signal the order into the pit. It takes about a second. We had a second advantage on that. So that was a big advantage, I think, that we had on the floor. But the disadvantage I think we had on the floor is the fact that we didn't have all the information that we have available to us now. At the end of the day, all these things that I've mentioned about on the floor, markets move because of supply and demand. They don't just move because of what locals are doing, honestly or dishonestly, but they move on supply and demand. And now in the electronic world, we have much more information available to us. We see our charts. One thing that we certainly didn't have was the ability to look at multi-time frame analysis. Now, multi-time frame analysis, I'm a massive follower of it. I trade off the 15-minute hourly chart, 4-hourly chart, and I'm always looking at the three above. So if I'm trading the 15-minute chart, I'm looking at the hour and I'm looking at the 4-hour, and if I'm trading the hours, I'm looking at the 4-hour and I'm looking at the daily. So we didn't have that type of information. In fact, in those days we had, no charts really at all. In fact, in the early days we used to have the charts we used were point and figure charts. Now these could be done basically manually done. Point and figure, if you don't know what they are, in fact, I did take a screenshot earlier about my point and figure. Let's see if I can find that. So that's a point and figure chart. So every time the market goes up, a tick or a tip or pip, we used to call them, tick, we used to call them, you'd put an X, and every time the market goes down, you would put in a 0, and it'd have to reverse 3 points if it was 3 tick reversal for you to move the to start reversing the zeros or the X's on the chart. Okay, we had one of our Yellow Jackets admin girls. We got her in the early days to actually keep a manual chart in the booth in the booth there, and it's quite amazing really. She was there, putting in the X's and the noughts there, and all the other brokers would come around to our booth to look at the charts, to see what was going on. Now, gosh, these were so inaccurate looking back on them. The girl could, or if it was a guy doing it, they could, take a telephone call, or they could talk to their mate and miss a print on the screen, or miss something going on. And she didn't put it down on the little screen, or she could have a sneeze, and all of a sudden there's a new resistance level created in the market. I mean, these were so inaccurate but the markets, all the locals would hover around our place looking at our charts that were done manually. That could have been, she could come in on a Monday morning with a hangover and just not update it. But these were creating levels that people relied on. It was really quite amazing how that worked. But the other chart that we had there on the floor, I think most of you might look at them now, are these pivot points. Now, for those of you that don't know, the actual long name of a pivot point are floor trader pivot points. Now, floor trader pivot points, basically because these were invented by the traders on the Chicago market, the locals on there, because all they needed was a calculator, and they can work out the pivot, the high, low, close, average, and they can do the R1, R2, and S1, S2, and S3, S4. So you can get 7 points out of it just by using a calculator. But that's where they started from. So a lot of people would have used that as their only technical analysis, if you like, that was available to us on the charts there. So that's really how it different. But I think the protection now for me, trading on the screens is a lot easier. Every time I place a trade, and you're going to find this when I get into the premium room with me. As I say, it's not a signal service, but I am going to be placing trades because at the end of the day, it's what puts my kids through school. So I have to be trading, and I'm going to be in there all day. So you are going to see me place trades, but that doesn't mean you follow them, as I've mentioned a moment ago. But what you will see me do, I will be analysing the trade, and I'll be analysing my risk, and I'll be talking about that before I pull the trigger on each and every trade. And as long as I have a positive risk reward, and I said that either yesterday or whatever, which is at least one to 0, then I'll pull the trade. I will never pull a trigger if it's less than 1 to 1. I know some people do, and that's fine. That's in their plan. That's the way they trade. That's the way I trade. I've been around a long time in the markets, as I think you've now possibly got wind of over the last 3 days or so. And I've read a lot about the use of stops. Should you use stops? Shouldn't you use stops? I've studied them. I've tested them. I've traded with them, and I've traded without them. But I can tell you now, the way I trade, and this is not the only way to trade. So don't think I'm the holy grail in trading, because I'm absolutely not. But I can tell you this now, without a shadow of a doubt, I will not be blowing up any trading accounts with my trading. I want to make a steady return every month, and there's not a doubt in my mind that you'll never see me blowing up a trading account. I value my life. I value my kids' lives. I value the lifestyle we have, rather than going out blowing up trading accounts. So that will not be happening the way I trade. I know my ultimate risk when I place the trade. Now, of course, you get slippage with things like when the Swiss announced their breakaway. But those things do happen, and but my risk size would never be big enough to blow the account. But also, I will always have that protection in place myself. And I think that's a lot easier now on the screens. In the pits, you couldn't have that. I mentioned yesterday about the Italian pit. That could move 30, 40 points at a time, and there's nothing you could do about it. That guy that, in the short sterling trade, over George Soros and taking on the Bank of England, it didn't matter if he had stops. He wasn't going to get done on that. I mean, he just got himself into a ridiculous situation. The market gapped. The markets were moving. Interest rates are moving at 500 points at a time. The Mont was moving interest rates at 5 basis points at a time. Nothing you can do about that. you know, as much as I mentioned just trade to Rio, you know, I will never get myself into a trade to Rio situation. Now, this guy on the floor, okay, he made his money back. Great story, great to have a few beers and chat about it. But at the end of the day, you'll never see me trading the screens like that. And you know, maybe some people call that boring. But at the end of the day, you know, I'll be here tomorrow, and the people that call me boring, maybe, well, they won't be. You know, I'm not interested in the next trade. I'm really not interested in the next trade. Yeah, so we're still saying I'm still not interested in what's going on in the next trade. I'm not really interested in the next 5 to 10 trades. You know, I don't mind having those losers. I'll take those all day long. But I know that my losses are going to be kept to a minimum, and my profits will be more than my losses. And of course, over time, that has got to play out just on the law of averages. Okay. So what are we talking about here? Yeah. So I've talked about my time frames, yeah, and that's good. Okay, so look, Jason's going to be coming on soon, so I'm going to get off and make a little bit of a space for him. Now, as I get used to the screen drawing tool and all the other stuff we have here, I'm going to be coming onto the chat room more. So please do keep the questions coming on that. Sniper FX just said to me on the chat here, nothing wrong with boring trading. Well, that is it. I mean, it doesn't, and that's why these forums are great, isn't it? Because these forums are great because sometimes trading is boring. So that's why it's good to be in these chat rooms so you can be talking to other people and relieve the boredom. It doesn't mean you should be placing the trade though. It doesn't mean because, I'm not going to mention names because most of those trade points that are being put out are good valid trades, but it doesn't mean because these trade points posted on the forum there are the ones you should be taking. They're good points. It's a way for you to learn what other people are doing. But at the end of the day, you've got to have your own plan and do it the way that fits into your own plan. And of course, we're going to be talking about that now throughout the next week and a half as we go on. But as I said at the beginning, I've been talking about the life market for 2.5 days now. Excuse me. And so I'm going to try and keep that to a bit of a minimum now over the next week and a half because as fun as it is, it does get a bit the good old days and all that stuff. But to indulge me on this last one because this last story is a story that happened in the pits, and to this day, and I'm going to end on this, so don't worry about it. To this day, it's got to be the story that I take everywhere I go in my trading chats, and when I should do the public speaking to the on Forex exhibitions and so forth. This story I take with me, and it's a true story. Now I must admit I wasn't in the pit at the time. I was down the other end of the exchange floor, but I think I was trading the gilts. But this was going on down in the European end, so it would be down in the Italian government bond pit, I think it was. And it was regarding a particular local. He was a very, very big local in terms of account size. He was a multi-millionaire, and I think I've alluded to him a couple of times. The life officials, those are the guys that are in blue, they have the power on the floor to issue out fines. Now, a fine is if you do anything, if you violate any of the market rules, of which there were some. Now, maybe I haven't spoken too many about the rules down on the floor, but it wasn't just a, free as you like, do whatever you like environment. There were set rules down there. Now, one of the rules was actually that you weren't able to use foul and abusive language directed at another individual, trader or one of the officials. Anyway, this situation happened. Some young trader had upset this new broker that had just come into the pit. It's a young rookie apparently, and this very high, wealthy, local decided he thought he'd have a go at this young broker, and he was shouting obscenities at this guy, calling him an effing this and effing that. Now, every time you say the word F or another abusive swear word, you get a fine, and it was $1,000. And $1,000 is signalled with that, so that is $1,000. So he was giving abuse to this young lad, and every time he said the word F, and he was shouting up at the life official was just going that. And every time he was doing that, this guy was getting fined another £1,000. That's about it's about $1,200. He's getting fined £1,000 at a time. And eventually, they went on for about 2 or 3 minutes, just effing, blinding, calling him every name under the sun. And at the end of the day, the guy said in the pulpit, he goes, okay, I'm not going to mention his name because he goes, okay, that's $12,000. And this guy replied back to him, goes, do you think I gave a flying... I've got 37 million quid in the bank. That means nothing. He wrote out a cheque for 12,000. No, and with that, I think the fine went up to 14,000 with his last little comment. He wrote out a cheque for £14,000, wrote it, threw it on the floor, chucked his cards on the floor and walked out to the exchange floor. That guy spent £14,000 just because he was a bit annoyed with one of the guys that walks into the pit. Now, 14 grand is a lot of anyone's money, but that was the height of arrogance. Now, within about an hour of that happening, everyone on the exchange floor knew what this guy had just done, and it's a story that I really think is one of the best examples of the life down there. We weren't all like that, but it certainly was. We had the characters down there, and it was a great experience. Right, tomorrow we're going to be talking more in detail about what makes a successful trader. So that's a bit more market relevant to today. I've been on for 25 minutes, so I've got to get off now. Jason's going to be on in about half an hour. We're planning a special, and I think it's going to be Friday. It all depends on scheduling, but we're going to be planning a schedule where Jason and I are going to be coming on together, live streaming, and we're going to be going through some typical questions that have been chucked out on the forum over the last, throughout this week. So if you do have questions that have been ignored, not intentionally, of course, do put them on the forum later, and I'll go through them, and we'll hopefully address them verbally on the live stream on Friday. I think it's going to be Friday, but watch out for the scheduling on the site there. If it changes, obviously it'll be updated there. Jason will be on in about half an hour. So in the meantime, I'll leave you with that. The dollar yen is still around this. It's just dipped below the 120 level. So I'm going to look at my analysis here now, and I might be getting in here with a risk around the 108.90, only because that fits my plan. Don't do it because I'm doing it. Okay, I'll speak to you later. Thanks indeed for joining, and I'll speak to you soon. Goodbye.